up. Let's find out what our chartists have picked out this Friday morning as their top ideas. Dr. C.K. Narayan and Kunal Bothra joining in. Gentlemen, morning. Good to have you on board. Let's begin with you, C.K., and understand what you're making of this phenomenal rally that's playing out day after day in the markets, and share with us your top calls.
Good morning, Avan. Good morning, everybody. The rally, I think, is being fueled by skepticism. Now, the cliche for this is climbing a wall of worry. Now, there has indeed been worry right from day one, I would believe from 24th of March onwards, because people are looking at the environment and they are looking at various comments relating to damage to the economy, to the world markets, to anything and everything. And nobody is seemingly looking at the market. Now, it's not as though the market doesn't have its brains and it is going off on an independent track, completely unmindful of what is happening in the world. Market is composed of people, and market action is a result of people's emotion. If people were so much worried about what's going on outside, how come they are buying into stocks? For sure, if there is a sustained rise for 4-5 months, somebody has to be buying into the stocks. It simply cannot happen on its own. So the people who matter, the people who can commit resources, I think they are the ones who are buying stock. The rest of the people are just complaining about the situation, but then they can't resist the rising market. So they give in and they participate in the rise, creating the momentum upside. I think that is what is going on. It's a cycle which is going on until something external will come, some sort of a shock will come to the system, and that is when it will get disturbed. But until that time, there is absolutely no point in wailing against what is going on outside and not doing what is going on inside the market. So I think this rally, as a technical analyst, we can only come up with higher and higher levels where we may expect some supply. Will it stop there? We have no way of knowing. It is an indication that there could be a top, a point where we should be a little more on the alert. As things stand right now, that point is about 11,800 on the Nifty. Yesterday's data shows that 12,000 calls have got built up since the price was only 4 rupees. I think that is all entirely long position which has been created. So somebody is betting for 12,000 index also. So clearly market, there are enough people wanting to buy, so there is no point in fighting this as a trend. So with that as a background, I would say let us continue buying, and I have two buys for today also, and the first buy is on Escorts, stop loss 1130, targeting 1180, and the second buy is on Sun Pharma, stop loss 525, targeting 550.
Okay, yes indeed. That perhaps is the only rationale to explain the exuberance that we're seeing. But Kunal, put it how you want. The momentum is definitely intact. You've got FIIs as well supporting our markets. How are you reading into the levels? And share with us as well, what are your top picks for trade on this Friday morning?
Yes, Avan, good morning. First of all, I think, the markets are definitely in the thick of momentum, whether you talk it on in the index front or whether you talk it on the stock specific front, whether it's large caps or a mix of mid cap names. There are no doubts about it. Now, when I was looking at the options data, and especially for the start of the September series, there are a couple of important observations which I believe short-term traders should be taking note of. One is the build-up on the option start of the September series. You have 12,000 call as one of the higher open interest built up for the Nifty so far. That generally indicates that the markets are expecting that the 12,000 level for the Nifty could probably be tested for the September series. The other part, when you look at the put options data point, it indicates that 11,000 as well as 11,500. So 11,000, of course, is the higher amount of open interest, and there's been a huge build up on the put side there. That generally indicates that the put writers, or the ones who have been selling put options, they are pretty confident that the markets may not fall below that 11,000 mark. In fact, there was some added degree of confidence as well towards that 11,500. So we have 100 points of cushion on the Nifty from 11,500 levels, and the put writers are still confident and expecting that for the for at least the first part of September series, the markets may not fall back below that kind of support level. So I think that's some important observations to take note of from a short-term trading view. Now, the bank Nifty remains to be a focus, and I believe that many of the banking stocks which have shown signs of breakout, they should continue to move up higher. I'm picking up two stocks from the banking and NBFC name. First one is from the PSU Bank pack, and that's SPI. I think that stock looks extremely attractive. There have been very strong indications of fresh buying of call options on the September series, 230 strike, 220 strike plus levels as well. I've seen some good buying for SPI. That generally indicates that the stock should gradually head towards those kind of levels. So as a short-term trader, one could look at a buy, be 225 as a potential target range, and stop loss to be kept at 210. The second would be about LIC Housing. Now the stock did pretty well, I think, a couple of days back, had almost a 10% kind of a uptick. It's remained sideways for the last 2 days, but I believe that the momentum is very strong. The stock not relenting to correct as well, I believe is a very strong signal that this move could see a continuation for LIC Housing. So that's also a buy, targets of 315 and stop loss at 298.